Hey everybody, welcome. So happy to see you all here. It is Tuesday. Welcome to Psychology Lab. I'm so glad to be here with you. I'm Coach Becky. We just hopped over from Power Hour, which was an interesting close, great conversation, good questions asked. What's up, Coach BluSky, Breezy? Welcome everyone. Welcome to the party. Thanks for being here. So you guys know psychology is my jam. I love all things trading, but I really like conversations around psychology. And for me, I'm actually so happy to be here with you and create these presentations because it really makes me dig into what is serving me and making me the strongest trader that I can be. And so it's like a win-win for me because I am working on myself and having these conversations with you guys that ideally will bring some gem, some pearl of wisdom that will help all of us. So that's the intention of these Tuesday labs, and I'm really grateful to be able to host them with you. I really want to talk about patience. And I know it's not like a complex word, patience, that we get to experience that in all parts of life, especially as adults. I mean, we have to deal with being patient everywhere to be successful and calm and have modicum of peace in our life, because otherwise it's super easy to get frustrated at all kinds of things. But I think if we could really put forth some energy and thought around having the strongest patience that we can in life and in trading, it really does help to build more success for the long term, helps you get your timing down, helps you lock into your discipline, your entries, your exits. I think that it's just really a strong energy to approach trading and kind of life so that we can enjoy the journey as well. I think that by being a more patient person and letting things unfold how they may and not pushing agendas so much all the time, we can generally have a little bit happier, healthier, peaceful lives. So we'll talk a little bit about trading and life and how we can rope it all together to be our strongest selves for sure today. So specifically, of course, I'm going to relate it to trading because that's what brings us all together today, is that we're all traders. And so we're here today to figure out something we can gather from this conversation that will help us be more steady and let the profits lock in even faster. So thank you guys for being here. It's absolutely going to be a patience type of conversation today because nothing in the world is perfect and nothing works perfectly every time. And these are just the things that we have to learn to deal with and not get flustered over or irritated with or cause revenge trading or any kind of things that can actually derail our progress with whatever we are trying to do in life. So let's think about it from the perspective of novices and professionals. And specifically, we're going to loop it into trading very often today. So in trading in life, patience isn't just a virtue. And we've all heard patience is a virtue. Well, it's true and it's catchphrasy, but also it's very powerful. There's a competitive advantage to people who can approach life and what they're building with a patience, because you can let it unfold in a reasonable manner based on what you're building and what your skill is that you're bringing to the table. And it pulls you away from chasing quick wins. Instead, you're more trying to lock into a stable system, believing in the long-term goals, recognizing that each day is not going to make or break your end game outcomes. And so having that perspective on this is really a strong advantage when you're in a professional or competitive environment such as trading. I think we all can feel the experience of when we're impatient, because impatience creates emotional decisions, and whereas patience will make you much more strategic and calm. You can wait for the right setups instead of forcing that trades. And I feel like we're more aligned. I don't know if you guys have this experience, but when you're patient, you can step back, push back from your computer a little bit. You can allow the candles to present, see what they look like, allow a trade to really set up and give you the information that you might be looking for to have your entry criteria. Then you can feel the rhythm of the market better, because it's a totally different approach of sitting forward and hunting and thinking, projecting your biases on the market and then trying to get in first, versus sitting back, being patient, letting the patterns develop. And then when you see your ideal entry, that's when you get to execute. So that sort of is a very different energy, and patience is a huge component to capturing those opportunities better. So there is a phrase that I love and I use all of the time in my trading, in my life, in any sort of extra entrepreneurial pursuits, and that is let it take time. So I would encourage you guys to think about this, write it down somewhere, remember it if you can. But the concept of let it take time means that you're not supposed to achieve something today. Big things that really have the power to change your life, to create generational wealth, to elevate everything that you're trying to create. None of those things happen overnight. They do not happen in months. They take years at a minimum. And by kind of having eyes wide open, respecting the journey of that, in the big picture, that's what's realistic. And that's what's like the truth for a lot of high achieving adults, is that they didn't achieve it in year 1, year 2. I mean, in trading, in the media, there's a lot of that BS out there of like broski who got the Lambo by age 23 by following this one guy on X. That shouldn't really be the goal that we're striving towards, because it's not super sustainable. It's not common. It's not realistic. And it has a higher tendency to fall, which we'll talk about. But by letting it take time, by seeking out the best mentors, drilling into their system, backtesting it, creating a robust trading strategy for yourself, and then working it every day, asking questions, fine tuning it, that is more the energy of let it take time. And then specifically like intraday, like within your trading week, these 3 things I have on screen here are really powerful energy. So waiting for your setup, right? We all know that experience of you, when you're a day trader, you log in, you open all your systems in the morning, you do your pre-market routine, you write out your general trade plan, and then you just sit. You have to be patient and wait for your setup, wait for the pattern to develop, wait for your entry criteria to trigger, wait for what you need to see to have the highest confidence in the trade. That way you're worth putting your accounts and your leverage on the line. The flip of that is forcing trades. And so you want to try and build a strategy around creating the best understanding of what your setup would look like, and then bringing patience into that. That way, when you do put your stops, put your risk on the line, you can have more confidence in that, and you can take higher quality trades because you aren't jumping the gun as readily. So waiting for your setup does require patience, because there can be early tells that a setup is coming, but by jumping in too soon, that can be a recipe for getting chopped up before the trade is fully ready. And then I do think that you can compound faster when you are more patient. LT, great question. You have Coach Matt and Coach Breezy, I think, in the room today, both of which really lead with technical labs. So I'll let them pipe in with when they're going to teach you about their setups. Today, we're not going to talk specifically about trading setups, but it's roped into this whole conversation of, as you develop your depth of planning on your trading setups, what you want to do is be pretty clear about what you need to see for that setup. And maybe if we have time at the end, I'll poke at it too, LT. But for this conversation, I want to kind of think about when you have a trading setup. For example, you're looking at a support to hold, and when price gets to that level, you want to see a certain candle pattern, either a morning star or a higher low, a break of structure up. Have that delineated in what you're looking for, and then take only those trades. And you can get the consistent gains over trying to get for outsized wins, trying to go in over leverage, just take a banger, take 20 points with 5 mini contracts and pass your account in 5 minutes. That is also a recipe for blowing your account in 2 minutes and then having to reset. Whereas if you take, a 400 point win based on your best setup that you feel really good at and reinforce your trading strategy, then if you repeat that day over day, in a week, you can have an account. And in another few days, even at BluSky, because you get daily payouts, you can be starting to take your payouts. And so that energy is so much more patient and sustainable, and reinforces what you're learning about your strategies and how often they play out. It gives you the data on your success rate of your strategies, as well as allows you to be a little bit calmer of a person. You're not trading in that massive fight or flight energy all the time. And then another thing with patience is that if you come to your trading journey really believing that you're going to let it take time, then you can have this final example here of there can be days that are not ideal for you, and you can skip those days. You don't have to trade every day. Some days really don't offer the opportunities. And so if we can accept this, preserving capital is so valuable for our system, because it allows you to not put risk on the table because you're at your chart and you want to execute something and you want to take money off the market. That is not really the best energy in order to have a powerful outcome that day. More so, the energy should be, I'm not executing, I'm not putting my accounts on the line unless I see a really great setup. And if it's just chopping around and it's not being clear to me, I want to, at a minimum, walk away, take a step away, maybe go for a quick walk, fix something in the kitchen, and then come back with fresh eyes and see if you can align and if a setup does present, instead of forcing trades. And it could be that you miss an entire day of trading, and that has got to be okay, because if you're coming at your trading with this let it take time perspective, then it's just a day. Like, meh. You don't have to trade that day necessarily. So I really love that whole concept. Now, speaking about compounding, thanks, Coach Breezy, for putting that document in the chat to you guys. You download that and check it out, when you're done focusing on patience. But thank you for that resource, Coach Breezy. So the silent wealth builder. Who doesn't want to build wealth, right? I mean, all of us. So patience and compounding is how we can really let it grow over time and amount to a kind of a big deal. And so both, if we look at this graph on screen, you can think about both traders approaching trading. Both have aspirations to be the best trader ever, and to learn and capitalize and have giant wealth. While one can start off a little bit hotter and achieve early success and then start sliding down and can just not be able to pull out of that and focus on it and get to the higher results. Sometimes starting off with wins will create that sort of pattern where you then win and start losing and have to figure out what to do with that. The second one, the darker line that curves up, that is showing you kind of the example of a slower start, but potentially, ideally, it's a more open and learning start where you're not pushing too hard and too fast at your growing. Instead, you're treating those first couple years as essentially your time at university. Now, whether you're just paying market tuition or you're paying market tuition as well as like mentoring trading tuition at an education establishment or what have you, or through a web, a company, but allowing those first couple years to be educating you on your best system, creating your playbook during that time, testing your theories, figuring out what trades most clearly speak to you. We talked about this last week about making your trading strategy individual to your personality, how you see the market, how you tend to want to execute, what strengths you bring to your system. So the first couple of years, if you really drill into those exact subjects, you create a stronger foundation and you can compound much more readily because you'll have so much more of a confidence in your system as you progress. So when you start with just 5% returns, they will grow over time. You can start building on that. And you're not chasing unrealistic targets or deviating from your tested strategies because you put in those hard months in the beginning to figure out strong strategies that you can trust. And you can create, through having your own playbook, different strategies that speak to your strengths and work in different market conditions. So on more rotational, lack of momentum days, there's strategies there. On strong trending days, there's strategies there. And so by creating a robust system over months to years, then you start compounding. That's where you can start adding more size. You can start adding more accounts in. And that's when this curve really can take off. When you have a set system where you can see these trades more clearly, you have high confidence in them, you have put in the work to know the ins and outs, where they're more likely to get stopped out in, what a fake out tends to look like, and how to manage that, then you can make those trades bigger as your time, experience, and confidence grows. And so the smaller returns will naturally increase as you get that skill and you get deeper in trading. You can start adding zeros to your outcomes because you are multiplying it in different ways. By taking slightly higher leverage, going from micros to many micros to a mini to two minis, or maybe 15 micros in the middle there. And then also different platforms, you can do trade copying. At BluSky, you can do trade copying to a couple of accounts because you can allow one good trade to be spread that risk wider, and your trades, one good setup can pay you in multiple different ways once you really understand your trading game. Now, this comes with time and experience. So this chart here is what I love about let it take time, right? Again, in the beginning, don't strive for home runs all the time. Instead, strive for base hits that are within your trade system that you understand. You put money on the line, you experience the outcomes, you learn them deeper in your core, deeper in your subconscious, because there is an intuition with trading. If you're not an algo, you will start to say, I have seen this trade set up 100 times. It tends to win. And when it tends to be a fake out, this is what it looks like. You'll start to catch the fake out sooner and see the really great opportunities sooner as well. And you can put a little more leverage on them. So this compounding effect is just incredible. And it wants you to be patient in the beginning. It will reward you for that patience in the beginning. I had to bring in a couple quotes from names that probably most of us know that kind of support this whole conversation and this outlook. And that is Ed Seykota. He was a very successful trend trader, commodities trader. He kind of pioneered computerized and systematic trend following back in the last 30 years, I think, was his trading career. But he was really deep into technical analysis and trends and moving averages. Well, this quote from him is, everybody gets rich in the stock market, but most give it back. The winners are the ones who keep it. So that should be our goal, right? Of not striving for the big hits in the beginning where we can post them on social media and feel amazing, but instead learn how to win consistently and keep it, which means that we're not risking everything to go hard and to get the big numbers, but instead to let it grow in time. I love Warren Buffett, who doesn't, but the stock market is a device for transferring money from the impatient to the patient. And I think if you looked up his top quote ever, this is probably it, at a minimum top 3, but it's so true. So the stock market is a device for transferring money from the impatient to the patient. This quote should have the acclamations that it does because of the validity of it. I think when you are impatient, you can have a big run, but you can also give it all back because you be greedy or you hold too long. You won't be patient with your trade management. You'll be greedy when you shouldn't be, those kind of things. So, and then Jack Schwager, he was the author of Market Wizards and all of the Market Wizards. His quote here is, the ability to be right and sit tight is one of the greatest strengths in trading. So I think that bodes to respecting the fact that you can't catch every trade. You have to be able to let the charts move, not be in every trade, not handle every trade perfectly, and feel some kind of way about it. What if there was a great trade opportunity and you were distracted? You had to take a phone call, you couldn't get in it started moving without you. Being okay with that will prevent revenge trading every time, because you can feel some kind of way about missing a trade or other people catching the trade and you just weren't available to catch it. Instead, recognizing that when the trade is right, it works with your system, your focus, your setup, the charts that you're watching at the time, you're going to capitalize on it. And that's not going to be every time. And that has to be a part of a successful system. So it's like a part of what you're building and growing. So I just really wanted to throw in some quotes that support the trading energy of patience with this. But then I think trading is a business, right? And so I wanted to pull in some entrepreneurship points to this because I really do think that we should treat trading as a business. You should have a business strategy. You should have intentions with your capital and how you want to grow and how you need to protect it and what your long game is, what that looks like, how you're going to pay your taxes on it, all the things. And so by treating trading like a business, you can hold better and have better long-term trajectory. So the start of that, right? Plant seeds consistently. So you want to launch with realistic timeframes, focus on quality, real outcomes, and knowledge building. And so that is the beginning couple of years, right? Where you are learning, you're figuring out what you want to grow and how you want to grow it and what sort of fertilizing it needs and how you can manage the seasons of it. And so you're basically tending the babies, tending the baby trees, tending your big baby business and getting the best information, figuring out how to foster it, how to fit it into your life, what you need to adjust, having some down months, some red months where you're like, what the heck is happening? Why isn't this working? And then you can pivot, adjust, grow, fine tune, figure out how to make the plants as healthy as you can. And I think that plays right into that endure the in between, which is sometimes the hardest part of this whole thing is when you've had enough success and you've tasted it, you want the outcomes. You're daydreaming, you're dreaming at night about the things that you can do with the wealth that you're building. And we want it now. Like I have been there. I want it now. I want to be a successful, profitable trader so that I have all of the money to do all of the things that I want to do in life. And I am a far way from, the annual salary that I hope to extract from trading eventually. And so enduring the in-between sometimes means something's going to go on in your life, something that is the market's going to turn and you're not going to quite catch it in time. You're going to have periods of drawdown. And so we have to build up some strength, some stamina for handling that financial strain, potentially the pivots in your system, the unexpected market shifts. Something could happen geopolitically, which I think we really thoroughly understand this year, that geopolitical changes can happen suddenly and have a big impact in the market. And so I think that this argument here about most businesses don't fail from poor ideas, they fail from quitting early is super valid for sure early businesses and especially early trading careers. Because I shouldn't say you're supposed to, but it's natural to fail in trading for a period. And that doesn't mean that you are not a successful trader in the making. And so, but to believe that in the periods of red is hard. It's harder said than done because you could be in a drawdown. You could be red for a week or two. You could have built up accounts potentially to the payout range and then blown them. And as I have done, like that stings pretty rough, especially when you're thinking about how the payouts are only 2 days away, maybe, or what have you. And then something happens, you just can't manage it. You give in to, heaven forbid, revenge trading or what have you, over leveraging. To be able to get back up as many times as you need to from that situation is what helps teach you how to not do it as often. And you slowly will start to pick the better behaviors, change your life and your choices around your trading, and have a little bit less drawdown over time if you can endure. So endurance, perseverance, resilience, those are massive in trading in the middle few years before you really have consistent gains being locked in. And if you cannot quit early, it's a really big deal in business, in trading, in life, in adulting, just recognizing that it just won't be perfect. Life just isn't. And I think we all know that. We can all think about different things that we can parallel to this easily. And it's extremely true in trading. It's different though in trading because it's like money, like money can feel strong and powerful. Like the big winning days, you feel like you're on the top of the world, you're indestructible, you have landed on a gold mine. And at the flip side of that, where you have a massive losing day, it can feel really disheartening at a minimum. And so the endurance through those big emotional swings is something we have to really put energy to not let them take us down and not let us sway us too far from the goal. And so endurance on the highs and lows so that you can get through that requires patience to reap what we have built, right? The strong foundations built patiently can create that competitive advantage that you can't really rush, because those periods of resilience teach you how to be resilient, right? They teach you how to have a losing moment and get back up again. And then by the time you're achieving your next payout, it's like, dang, okay, so I did survive that. I did learn from that. The things that I did wrong, I talked to my mentor or my training partners about, and I'm not doing them anymore. And now I'm right back where I was, and I have better momentum and stability with me. And so being patient enough to see that through the cycles of the pivots and the drawdowns potentially in your trading career helps you get to be able to reap the rewards a little bit faster, because that experience compounds on itself. So I really love that as the energy to where we're all going. Now, we talked briefly actually with Coach Matt in Power Hour today about a parallel with physical fitness in your body, because you can really mess yourself up if you do really hard, fast gym work where you're really pushing heavy weights. You want to try and be a bodybuilder faster. You could get an injury or just really cut corners in terms of your foundation and your the way that you're doing it, who you're resourcing. Also, crash diets are similar to this too, where you want to just lose weight for this certain thing. And if you just cut down to 500 calories a day and only drink lemon juice, that might sure cut off some weight, but it's not a healthy way and it's not sustainable long term. However, if you attend the gym and you learn proper form and you strengthen your body for 5 workouts a week for multiple years, you are solid, strong. You can outperform anyone who went all in for a couple months and quit back when they were 25. Like that is not the ideal. Instead, those gradual sustainable gains create strong muscles that will hold you for years to come, long-term health, compounding results. You get quicker. You'll notice just carrying your groceries into the house and chasing your kids, you get winded less. Like the foundation changes. And so those like steady, consistent deposits over a long period, that is how you outperform people who are rushing and potentially have a significant injury from that. Or, you do the crash exercises and diets and cardio. And then, 3 months later, you are right back where you started. You gained everything back because you couldn't hold that momentum. So if you can get in a pace that fits with your life and your goals, that is so much stronger too for longevity. But that requires a patience. You go to the gym 4 days a week, 3 days once, 5 days the next. You do your best. You have a busy life, 4 days a week after that. It might not seem like you're doing enough. Maybe you only get a 45-minute workout in on those days. And it's like somebody else does a 45-minute workout and then runs for 2 hours. And like you could feel some kind of way like you're not doing enough. But if you do what you can do and you get it in more days than not each week, at the end of a year, you'll be leaner, stronger, faster, steadier, have a stronger foundation for strength. So similar to trading, where if you just try for those home runs, you make it count, you blow them out of the water, you pass them, then you continue that momentum, you get a payout and then you blow it all. So you've paid all those fees. Then you're resetting all of that and you're figuring out how to start again. Versus the person who just showed up, got the base hits, asked the questions, adjusted their strategy, journaled what happened in that day, was a little bit stronger the next day. At the end of that year, they're going to pay a heck of a lot less reset fees. And they'll generally have a stronger, steadier equity curve that is slowly curving up because there was more focus placed on learning and smart trades versus home runs and big money. So the parallels for me are really powerful, and it can create a visual in your mind. I don't know where everyone's at with their fitness or diets or whatever, but most people have done a little bit of adjusting their personal weight and strength. And so this kind of makes a lot of sense to me. So the frustrating reality is that sometimes the outside world makes this really hard. And I think that this is very true. And you're going to feel pressure from all kinds of things that is going to make you want to be less patient and less calm, less stable, and less able to stay chill. So market conditions for starters, right? Market conditions can shift, like we were just discussing today too, speaking of tomorrow, about bear market versus bull market. Are we in a pullback, or has the market shifted and we're in a bearish market for the time being? Well, that question is out there because we've seen some breaking of some levels and we're dancing and it's not clear. But what is clear is that we're having high volatility days and we're debating this issue. And so you kind of have to be really careful and cognizant of what is being presented. Is who is the stronger force? And it will change week to week, day to day. Is there still liquidity in this and that? And does it feel the same? So does something that worked last month still work? Not necessarily every time. So you have to constantly adapt and think about your strategy. If it didn't work, if the setup was an A+ setup last year and it was killed twice this week, I tried for the same setup and it didn't work. Why? What happened? Who should I ask? How can I adjust? What can I backtest? What might have shifted? Asking those questions will help you get through these external forces that are potentially challenging the situation. Similarly, the unexpected news, I mean, that has definitely been a factor with the recent changes in world economics as well as just US based, because geopolitical events, news drops, the tariff influence, potential war, economic data that is coming out that maybe comes outsized to what we're expecting. The big businesses that run the indices can have significant company news that sometimes was not anticipated. So, there's going to be disruptions to what we're trying to do. And so having patience during those periods is actually really hard. So knowing that things like that will happen and it can derail you is something to have to prepare to, whether you're building a business or it is trading specifically, especially trading specifically. Knowing that that can happen and it can really cause a hard hit if you're in a position potentially, planning for that to be a part of your strategy is really helpful, because you don't have to have that be a personal affront, basically. Recognizing that the external forces can derail you temporarily, and that doesn't mean that you're not still steady and strong. And what you have learned thus far won't hold over time, but more so that maybe something is going on that I need to think about hard and how I might adjust from that. But it doesn't mean that my trajectory is really much different. Could mean just a little bit of a pause in what you're doing. Similarly, seasonal patterns, right? Earnings cycles, you want to be prepared and know if there are big earnings that are coming before or after market close, because maybe if you're holding a position that is on that ticker or highly influenced by that, such as, some of the big businesses that are in the indices, the months that are the quieter, the sleepier potentially. So like in the summer months when there's generally a lull. So maybe in those times you want to expect smaller ranges, things like that, where you can adjust and you can't control them, but you can adjust, you can anticipate them, you can try and study them, you can ask your friends, be a part of a community and throw it out there of what is happening? Why are we seeing XYZ? Asking these questions will help you get to the answers quicker. At least have a good dialogue about it that maybe will give you a little light bulb moment into your personal experience or to overall understanding of the market. I think that, having the conversations around these and knowing that they don't mean that you're necessarily off track for where you're going, but that they are going to be a factor that might make it a little bit harder will help when they come to normalize that in your brain, that it's okay. I think this bottom here, most successful traders don't resist market conditions, they flow with them. So if you can't change it, letting it go is ideal. Focus on what you can control. You can control a thorough preparation for your trading. If you know you're coming in for your trade day, you can spend the time to really create your trade plan, draw your levels, think about it, do some nice steadying rest. That way, when the charts do start to print, if we're in a little bit of a different condition, you are at least at ideal control, patience, peace when the candles start to print. That stronger, steadier base will always give you a better day. It will always start you in a little bit of a stronger, more stable position to sort out what the heck is going on. Because we are choosing to work in a volatile environment. And so having that strong preparation behind us is so helpful. And then of course, what we can control is our risk management and our execution. And how you do that is by doing the back testing, by having a strategy and a playbook that says, in this setup, I like to put my stop behind this 5-minute candle because I have seen that will hold most of the time if the trade is ready and it is moving, which is my trade plan. That's my assessment of the market right now. This is how I'm going to manage it. And let's say we're in a situation where volatility is really high. Maybe some unexpected news did come out, such as the tariffs of last spring. The numbers were printing really fast and the candles were outsized what we had seen through the winter period. In that situation, a lot of traders that I know, myself included, downsized. If we were trading 1 or 2 minis, we would trade 4 to 8 micros in that situation, because it was like, dang, my accounts are not the size to hold the risk of a 5-minute candle, but my strategy is that setup. So you can leverage down in that moment. And that is a way that you can control your risk management when external forces are potentially trying to throw you off your game or put you in a situation where you're risking more. When you're risking outsized to what you're used to, you're going to feel some kind of way in terms of those dollar signs being thrown around on your P&L, and you will slide into fight or flight faster. When you slide into fight or flight, you're just not as logical. You don't manage the trade as ideally per your information, per your back testing, and you're not going to have the best executions in trade management if your leverage is too high. So I love this point of controlling what you can control and letting the rest go. If you see that the candles are printing in some kind of crazy town way that you don't understand, isn't in alignment with your system, you don't enjoy, the choice there could be to just not trade that day. If you can't control it, you don't like it, it's not your setup, let it go. Recognize that your system is for the next 20 years. And so if this day doesn't feel it for you, then maybe next, thank you next. Bye-bye. Closing system. Moving on. Ooh, I'm going to take this question quick because I only have like 2 or 3 more slides. Trendy Trader, what are your thoughts on passing evals quickly, being aggressive, over leveraging, taking more trades than you would normally to get from an eval to a funded stage? Then in funding, switching to your idea of long-term growth. I know it depends on trading ability, experience, financial situation. Just looking for your thoughts on the idea, worth it or not. Okay, so I don't know a person who trades prop funding companies that hasn't considered this exact question, Trendy. Like, I think it's a great question. Is she still here? Are you still here? Your name's not on the thing. But I will definitely let you know my thoughts on this. And my thoughts are how the habits that you train yourself to execute is going to be what you do more often, is my short answer to that. If you start your new evals, aggressive, heavy contracts, you want to pass them in the 2 days. That is the minimum required for consistency. I get that energy. I have dabbled in that myself, and it will get you to the evals quicker potentially, but also can get you blown them because you're trading higher leverage. What I have found the most successful for myself is to try to always just execute for my strategy the best way that I can. And so that generally will mean I'll pass an eval in 4 to 6 days. And I think the reason why I do that and why I would gravitate towards that answer is because I want my habits that are ingrained in my subconscious and my hand wants to click through to be in alignment with what I have seen get me to the best outcomes. And that is a little bit slower and a little bit more steady. And now I have at times traded certain volatile moments with like 1 or 2 evals and, kind of been into the volatility. I think that's a personal choice. But if I have accounts that I'm really trying to grow in general, I think that creating the habits that you want to trade long-term, I think is the most strong strategy for letting it compound over time, because those 2 days versus 6 days, when you're getting an eval passed, is it worth it to make your habits inconsistent in order to get the eval 4 days quicker? For me, it is not. For me, I would rather be really steady and locked into my system and let it take time. I think that is the most consistent for the long-term steadiness of your accounts. So that's what I would think on that. Great question. And thank you for typing that. Okay. So the danger zone of forcing outcomes. Oh my gosh, look at how that played right into this next slide. I'm so glad I read it. So this is the kind of the counter to that conversation of trying to push harder and faster at trading. And that is this risk of blowing your accounts. So chasing losses, when you get into the revenge trading, it's really easy to do because losses suck. It's like someone calls you a name and it like fires you up a little bit and you want to fight back and the whole situation gets out of control. That's like revenge trading, where your accounts could have been steadily growing for 5 or 6 days. And then you can like take an affront. You had a really good setup and it was stopped out, and you cannot be okay with that small loss and get into chasing that. What I call is fix it mode. I call it that because I've done it and I feel like I need to fix it now. Sometimes I can, but sometimes then I am trading in fight or flight and I am pushing my luck and it doesn't go well. The statistic out there is 70% of new traders blow their accounts within 90 days, mostly from impatience. That is the trying for the big wins and pushing it as fast as you can because you just want to get to the next stage. You recognize that an eval is an eval and it's not going to pay you until you get it to the next level. If I trade 3 or 4 minis instead of 5 to 8 micros, I will pass it quicker. So I want to flux my strategy to pass it faster, but then that is an impatience. And that is taking on more risk than your strategy generally supports. And so it will blow accounts faster. Strategy abandonment is jumping between strategies before you allow time for them to work. And that is really hard for consistency. I think that this phrase, no edge works every day. I think that is true. And that is what I have found. That was a discussion today versus where we were talking about the market structure today of we have been making higher highs and higher lows on the 15-minute chart since we bottomed out in the early morning. And so there are long opportunities, but not every day is it going to keep making higher lows. Some days it's going to just fall back and settle in and it didn't have enough of a push in it that day. And so to have a playbook that is a little bit more robust, to be able to see two sides to each coin, recognize that each trade is not going to work each day, and to try to have a few different strong strategies, but don't throw one out. What if you were trying for the trending trade today and you went long on a reasonable place for a pullback and it didn't hold and it stopped you out? But another day that trade could have worked beautifully and it, yes, could have run up 20 points after where you got in. So to say that the trade that you were trying for with the long on that pullback was not a good trade, I don't think that's fair or accurate or reasonable. And you don't want to throw out that trade. You want to say, if this trade didn't work on this day, what was unique about this day? What can I learn? Do I need to adjust anything? What could I have caught that maybe this wasn't the trade for this day? Or maybe it was just the variance of what happens, that not every trade works and there's a probabilities to it. But to have that trade plan still be in your playbook because it's valid and it works a lot of the time is a strong choice versus saying, I don't like that. Somebody told me that. I read about it on Twitter. I'm going to find something else because that guy didn't know what he was talking about. That approach will prolong your journey because you're hopping strategies and you're not really taking the time to dig into what makes one really work and what are the conditions where it doesn't work. When is it better? When is it not better? What else could I do on this day where that one maybe wasn't ideal? So I want to pivot to this other one. So you can kind of create a stronger, wider foundation, but don't throw out the baby in the bathwater kind of story, right? And then opportunity blindness. So if you're impatient, you start to see trades everywhere. But if you could calm down, not every potential setup is a good setup. Now, I've been guilty of this where if I'm distracted or I only have an hour trade in the morning, for example, like today, there's a lot of time where I can really only be focused and wholly involved in my system for the first 45 minutes of the day. And if I can't get a trade in during that time, like that can feel really frustrating to me because I want to lock in a good trade. So in that mindset, when I come to the chart in that mode of like, all I have is this time right now because the rest of my day is bananas, it's an easier opportunity to force a trade that potentially isn't a great setup. And so I have had to do personally a mindset shift in those opportunities in those days to saying, I only have this ideal time. So maybe I won't trade today. Maybe I just won't see a trade that I like. And that's okay, because that is better. It is better to not execute because I didn't get a really good setup versus just executing because all I have is right now. And I want to like throw some at the wall and hope it sticks. Or, even I see a B setup, so I want to take it. I'm getting more picky the longer I've been in trading, and I really want to see certain things. And that will help me, not give into the impatience of I want to lock in a trade and I'm just going to throw it at it. Instead, calming down, is it a potential trade that is worth it or not worth it? And so having that kind of maturity with, I can be patient, this might not be my day, is a more ideal approach to this. So I kind of wanted to just spend a minute here to talk about how we can do what good habits would be, what good habits to lock in our trading day for our most ideal outcomes. Because this is like the biggest slide of the day. This is how we put patience literally into our trade plan, into our trading day, what we need to choose to do each day to get us to the most ideal outcomes, to train our habits in the best way that they are the most strong for sustaining us long term. So those would be delay each trade just a little bit. And so for this first part, no trades the first 10 to 15 minutes. This is personal. Everyone is different with this. If you were trained to trade market open and you have a really strong strategy after the first 5-minute candle per se, maybe this is 5 minutes for you. Maybe this is 2 minutes. Maybe this is 30 minutes. I would say that this number on this first bullet point here is personal and it's based on where your strategy lies. But to have some rules around that is smart because the first minute or two of New York Open, there tends to be some whipping around sometimes, some outsized moves. So, that's a choice to be in right at open or not, but make a system around your most successful trades. If you journal your trades, like say I got in at 6:37 Pacific Standard, 7 minutes into New York Open. That trade was this setup. It was a naked point of control setup. I faded the extreme after the first push and it won in this amount of time. So that data could show you over months and months and months that around 6:37, 6:38, 6:39, I have a high success rate. But if I get in at 6:32, I tend to get stopped out. Maybe if I let that first 5-minute candle close and get some more data behind that, my ideal setup really does come after that time. So I could implement a rule like this, feel it out, see how the data supports that long term and adjust. So delaying your trade just a little bit for your first trade to allow the information you need for your trading strategy to print, super helpful. And then also this next one is one that I sometimes am wishy-washy on. Don't tell my mentor. But no trade until you've written your trade plan for this session, which I love because writing out your trade plan, saying, I see this on the daily, this on the hourly, this coming into market open, this is what I think will happen. I am slightly bearish bias for XYZ. Writing that down, saying, if this level breaks, I think we're going to go to this one for my first target. My risk would have to be on the other side of this. Writing it down either in a document on your computer or handwriting it kind of helps slow you down by taking the time to get it from your brain out somewhere onto a document, slows it down a little bit and makes you think about it more strategically. Makes you think about what you would need to see to entertain a trade, and it cements your plan in your head a little bit more. So then you can't be as jumpy with your trading, not saying I see this and I want to go long because I see bulls. Instead, it makes you strategic. And so I love the idea of writing down a trade plan. This can be really elaborate and an entire page, or this can be 5 lines that are freehand with abbreviations. Whatever you can see, read, understand, speak to, but makes you slow down and think about how you want to do your trade, I think is really helpful. And then the box breathing that we've talked about before too. When you think your trade is starting to set up, 1 or 2 rounds of deep box breathing will basically just calm your system down a little bit. I think we've all felt a little bit of the adrenaline hit when your trade is starting to set up. You're like, that whole feeling of, it's starting. I see it setting up. I can't wait to get in. I think this is a really good trade setup. It's doing exactly what I wanted. I love what it's printing. I want to be in this trade. That is an energy amping. Your respiratory rate is climbing. Your heart rate is climbing. Your hormones are climbing. Your neurons are firing faster. So this asking for 1 or 2 just deep rounded breaths can counterbalance that a little bit and help you lock into your focus so you won't get faked out quite as quickly. So I would say try to do these things to just delay your trade just a little bit so that you make sure that you're really locked into your plan and you're focused on your data so that way you don't get faked out as much. And then what about this, you guys? Speak your trade out loud. So this is really helpful for staying patient because you're like checking yourself. And it doesn't have to be, I don't know, people feel weird about this, but I've heard many successful traders do this. And if you're physically in the room with someone or you're on the phone with them, whatever, it helps to say it out loud. And it can just be you alone in your office or at your computer, wherever you trade at. This is my setup because it is holding along the support level. It caused this big buying up wick. And if it breaks this next high, then it really supports my bullish entry off of this level. Saying that out loud, you're like reminding yourself what I like to see, what printed, what evidence I have in front of me to validate my trade. Also, my protective stop is here because my system allows me to hold a 5-minute candle risk. This is within the parameters of my account. I have 8 micro contracts, so I can only take this much risk, XYZ. By saying my protective stop is here because these rules of my system, you're less likely to move it. And moving a stop is like one of those cardinal sins of taking on more risk than necessarily you should. And so by verbalizing out loud, my protective stop, not my stop loss, my protective stop is here because XYZ, it's way less likely to move it. So I love that one. And then if this loses, my plan is off and I'm okay with this. And I don't know if you guys do this, but when I enter a trade, I like to remind myself of I'm entering this long position because I think this level is holding. My analysis reads that we are getting the buying momentum off of this level. And so we should be moving up from here. We've had the retest, we've had this candle, this pattern present, this supports my trade plan. So I think that we're going long from here. That is why I'm putting my capital, my accounts on the line. So if this trade loses, if my protective stop is taken, I am okay with it. And by verbally, mentally, emotionally accepting the loss as a potential outcome, that is more sustaining for not revenge trading and not moving that stop loss, not dollar cost averaging and pulling your risk too low. That helps just remind you of what your business is, how you manage your risk and what your intentions are. And that if it stops, you're stopped out. And that is the outcome. And that is a healthy choice for account stamina, like for trade longevity. And so I don't know if you think it's silly or not, but try it with yourself. Try saying it out loud. When you're thinking about your plan, you're writing it out, you're considering how you're going to manage it. Just take a moment and say it quietly. It can be quietly, so no one outside of the space that you're in has to hear you, but it is a reminder to yourself of who you want to be in this trade management and how you're going to manage your trading business for this trading session. Then mid-session, pause alarm. So this isn't a tactic for if you are a person who stays at your charts all day and you have that ability to consider trades throughout the whole day. Have a timer that goes off every 45 minutes, potentially intraday. And when that timer goes off, you just stand up and you step away from the screen. You ask, am I trading my plan or my feelings? Am I still at my charts because these are my ideal times? I like the setup. Maybe you're hanging out with us in the live stream, but are you still steady? Are you still focused? Are you still tracking and want to, wait for your best setup potentially? I think it's a good reminder that when we have like these long chunks of time for trading, to make sure that we are pacing ourselves, certainly at some of these, one or two of these alarms that could go off, you could get some food, get another cup of coffee, get some water, take a short walk, take the dog for a walk, maybe break it up a little bit. That way you can help keep your focus. I mean, staying hydrated and putting a little bit of protein in your body is really helpful for just your mental functioning. Your neurons fire faster and smoother when you have that nutrition. So I think this is really helpful for those traders who like to trade for multiple hours. I would encourage this to help you have patience because it can kind of, offer a little reset, offer a little break, a self-check moment. I think that patience isn't about waiting longer. It's about inserting space between impulses and actions. So I kind of love that whole concept of it's not really like you think about teaching your children patience. Well, that's like you're waiting in line at the grocery store. You just have to wait. It's not your turn. There's a lot of people. It's peak grocery shopping hours. I'm sorry, kid. I don't want to be here either. We have to stand still and not touch every candy on the rack. That's not exactly the patience necessarily in terms of trading. More so we're at the deeper levels of that where there is impulsive trading. We all know what that looks like. You want to slow that down. We want to purposefully put patience into our system so that we don't feed into every impulse. Instead, we're taking actions based on ideal setup opportunities that are worth our risk. And if we can put some patience in there to slow that impulse reaction down to make sure that it really is ideal for our setup, that is powerful. That is the power that we are talking about for establishing a strong foundation and executing on your best trades long term and allowing everything to compound because you're not giving in to every impulse. Instead, you're checking yourself before you wreck yourself. It had to be said. You're checking yourself before you enter into some business that maybe isn't the best. And so that's where we want to really put our patience on. So moving forward, rounding out for today, I think progressing as traders, it's so important to build strong fundamentals and really let it take time in terms of mastering your basics, creating a trade plan, collecting the data on what you execute, what you see, how you got in, what time of day, how long the hold time was, if it rallied for 100 more points after that and you should have stayed in. Let your early years as traders build a strong foundation and agree with that, right? Don't try to force it faster. Don't try to press the results too quickly because then you could miss subtleties that are going to make you a stronger trader in the interim. You can miss little ways that you can make each strategy more robust by paying attention to what happens every execution on that strategy and what went well, what didn't go well, how you could maybe adjust that going forward. And then having a consistent daily practice around that allows it to build, that allows the small steps to compound into mastery, so that you do recognize this setup that happens, twice a week, what it looks like and how to capitalize on that better. That way, in 5 years, you can be a master of that strategy. You can see it coming a mile away. You could be set up. You could be patient. You could set alerts on what it would look like for that setup to be ready, and then come and execute on it with full strength when it comes. That's the goal, right? That's the goal of becoming a successful trader, is learning the ins and outs and the depth to our strategy. That way, when we see it, we can fire full size and really make it count for our financial and life goals. But then beyond that, I have to say, psychologically, embrace the journey, let it take time, not only to have the most robust system that is stronger and has a stronger base, but also let your body keep up, let your body and your mind and your emotions come on board with the fact that you are throwing money around on your computer and becoming a powerful, wealthy trader is the goal, right? That's not going to happen overnight. And we also want to enjoy the time and let the discipline compound, let those workouts build a strong body where you can finally see your biceps by summer or whatever. It will make it more enjoyable, and you can have a little bit more patience with it, because taking a loss on 8 micros versus 2 minis, you might have some emotional carryover on a full-size loss depending on your size. And if you're having massive losses more often, it's going to be harder to enjoy life, to enjoy where we're going and how we're getting there, and our family in the evening. If you've had a big loss that morning, but you have a family event that day, I don't know about you, but I have gone into an evening some kind of crabby based on my morning trading, and I don't enjoy that. And it's not really fair to my family either when there's that carryover. So for me, leveraging down and allowing patience helps me stay sane. I think it will help us all stay sane, where you can still have a lovely evening with your people, but not have a huge carryover. And it's this whole approach of, it's okay. It's just one day. The big days are awesome. The red days are a bummer. They're all just building you stronger. And so it's all fine. And what are we doing next? Kind of shut down the trading day, let it take time, enjoy the evening as well. Because I think we allow the process to unfold. I love that. The best outcomes come from those who give their process time to unfold. And so this is sort of the process that I would like to encourage. I know everyone's different. My jam here at BluSky is the trading psychology is my focus with what I speak to most readily. And I think that that's a part of the process, and allowing your process of your strategies that you're building to unfold, it gets to a pretty great place. Oversizing LT. I think that it's so easy. It's so easy to want to trade bigger size, and we have that capability, which is amazing, but it's a double-edged sword. So, the big wins are great, but I would encourage you to try the smaller leverage and then try to be super consistent. And if you can see what your results look like after 3 weeks, if you lock into more consistent on the smaller side of gains and wins, generally in a few weeks, you're in range of payouts when we don't have the big landslides in either direction that really back us off. So think about it. Think about if you're encountering the big highs and the big lows, can you go about your journey more patiently and allow it, a few months maybe to your next phase, but by settling into better habits, maybe that compounds steadily. It's an idea. Tomorrow, I will direct you to our YouTube channel. Is BluSky. Check it out. These recordings of these labs are all recorded and are put on our YouTube channel for BluSky. And I would definitely, if you guys got distracted or want to send it to a friend or, enjoyed any particular slide or what have you, definitely go back and you can watch them on YouTube. At any point, it's usually generally posted about 24 hours later for my psychology labs. But that is what I got for today, you guys. Thank you for hanging with me. Thanks for allowing me to be in this position to talk psychology with you guys every week. I really enjoy this time and these conversations and everyone here. Thanks, Coach Matt. Anyone have any questions or anything, any thoughts, any feedback? Yeah, absolutely. I love the questions. As always, please do send us any questions you guys have. Post them in the Discord chats and tag whoever, or just coaching in general, or you can reach out to us and DM message us with questions as well. Just let us know who you are. And then my psychology lab is every Tuesday at New York market close. Coach Matt's is every Thursday. He gets into really excellent technical questions that really create, like I refer to all the time today, and having a strong strategy and asking questions and building your strategy up. Well, that's what I'm talking about with Coach Matt's lab on Thursdays and Breezy and BluSky in the evenings. We all speak to strategy, and you never know. You attend classes and you hear things slightly different from different mentors. They say things in a certain way. That can be a gem that will help you fine tune your system. So showing up for things like this, again, is a part of that patient, letting it grow, letting your skill compound phase. So thank you everyone for being here. Keep showing up. Thank you for being on our team at BluSky. And I'm really glad that you all are here. Hope everyone has a great rest of your week. Thanks. Thanks everybody. Signing off for the day. Bye everyone.